bit. It's actually a decent jump up, but the expectations were high, and this gross margin fall, which has got the street a little, I would say, wary. VK Singh, COO, Blue Jet Healthcare, joining in now. Mr. Singh, a very good morning. Thank you so much for joining us. Let's start by you taking us through the highlights for the first quarter and address the gross margin drop.
Hi, Tamanna. Thank you so much. Thank you for having me on your show. If you recall the last time when I was in your show, then Neeraj had asked me about how the year was, and I said that this would be a watershed year, and last year was clearly a breakout year. The quarter four of FY25 was an excellent quarter. It was like an outlier, but having done that performance, the quarter one of FY26, we've improved the previous quarter by about 4 to 5% on the top line. All our segments have done well. On an year-on-year basis, contrast media has shown about a 50% growth. The PI segment has shown about 200% growth, and the sweetener segment has also shown good resilience. Your question on margin compression, let me explain that there's no structural change. I mean, the average sales realizations have not gone down. Over the last couple of months, raw material prices have not increased. So actually speaking, the gross margins are pretty much preserved. There's a 6% margin compression on gross margins. About 1.5% and 2% could be attributable to the product mix. The balance, 4.5% is because in the previous year, there were high inventories and a lot of overheads got inventorized, which are now, getting plugged into the gross margins. So I don't see any cause for concern as far as this is concerned. I think people have to some extent misread it. And 3-4 years back, our EBITDA was about 41%. In the quarter four of last year, previous financial year, it was 41%. But we have never guided 41%. We have always said that our EBITDAs will be in the mid-30s. And I think that's a very healthy level for EBITDA for our type of business, which is growing and growing very rapidly. And even after this margin compression, we are in the mid-30s. So I think as far as profit is concerned, we are in a very good space. As far as growth is concerned, we are in a very good space. The company inflected 3 years back. Today, as we speak, we are at another inflection point. What is getting incubated today will fructify in 2 to 3 years from now and will be a game changer for the company because we were forward integrating even further.
Fair enough. You're seeing the weight of high expectations and a base case there. So a mid-30s margin is what you've preserved. You never guided for 41, but that came in. That's why it's optically looking lower. Having said that, some of this, you said about 1.5% is because of the inventory mix, etc. Do you see those conditions easing going into quarter two?
Contrast media has historically given us better gross margins than the PI business. And you would see that on an year-on-year basis, there is good growth in contrast media. On a Q-on-Q basis also, there is a growth in contrast media. So we are very confident that our profits will be pretty much in tune with what our historical performance has been for the last 18 to 20 quarters.
Mr. Singh, good morning, Neeraj here. You get back to what, 53% in quarter two, but you still believe you'll manage the gross margin range of 53 to 56? Because just remember, right now I'm talking about the gross margins, not the EBITDA margins. So, Mr. Singh, the question on the gross margins.
Yes, I think those gross margins will normalize in the next quarter.
Will normalize in the next quarter, and you probably stay the range of, 53 to 56, which is good to know. Does this quarter one performance in any way impact any formal or internal guidance for FY26 that you may have given, Mr. Singh?
See, Neeraj, as a policy, we don't really give a guidance. But then what you need to see is that quarter four last year was an exemplary quarter, was an exceptional quarter. The quarter one of this year, we have given a growth of about 4.5 to 5%, even on that previous quarter four of FY25. And I don't see any reason why we should not be able to maintain this trend.
Okay. Now, one of the notes suggests that an uptick in the utilization in the dedicated capacity for the bempedoic acid intermediate would be the key driver of near-term earnings? One, do you agree with the same? And if so, what is the color that you can provide on this?
See, the molecule is doing extremely well. When it got launched, it was with a limited indication, but today it has a much larger, wide indication, and it's a primary therapy for cardiovascular treatment. The patient population is huge. Today we are at 500,000 as far as the patients in the US are concerned. The addressable market is about 70 million. So there's a huge uptick possible over there. We are the primary suppliers for the advanced intermediate. And we are getting qualified with more sites of the innovator. The capacity that we have, I mean, if you look at our previous run rate of the previous year or the last couple of quarters, the capacity that we have, we can easily go to more than double. The traction that the molecule is getting is great, both in US and Europe, and will get launched in Japan. New markets are opening up. So I don't see any reason this will continue to be a very important ingredient of our good story. Nevertheless, as I said in the previous show when I was there with you, that contrast media as our flagship will continue to be the mainstay of the business. There will be secular growth in the existing products that we have. And this year we are launching 2 new products. One has already been launched, and that's on the MRI side or the gadolinium side. We are making a debut on the MRI or gadolinium side of this business. Till date, we have been on the iodinated side. You can cite the numbers and the results of the previous quarter for this MRI side contrast media. We will be launching 1 more product on the iodinated side, which is a very large product, an advanced intermediate for that in the next quarter. So there are good, tidings for the contrast media segment also, and there'll be good growth in this segment.
PI and API, Mr. Singh, in the pharma intermediates, as you explained right in the beginning, that was the big one, right? 251% growth that you saw year on year when you compare the quarters. Do you see that sustaining? Or is that also something which was unexpected maybe?
It was not unexpected. I mean, this opportunity was incubated 3 to 4 years back. There is gestation in pharmaceuticals, particularly on the CDMO side. And we built up capacity in anticipation of this growth that you see in this PI API business. So this was not at all unexpected. We had very much expected these types of numbers. Going forward, I won't say that the growth would be same. You could say that whatever annual run rate we had in the previous year, we will certainly improve in that. It would be safe to assume that maybe a 15%, 20% type of growth on the previous numbers, but we wouldn't like to give any type of guidance. We see very good growth and traction on the end molecule, and being the primary suppliers, I think we'll be a part of that story.
Okay, thank you so much, Mr. Singh, for joining in.